Good morning. It is Monday, March 18th, 2024. This is Rob Sin at CEO Technician on X, at Goldfinger on co.ca, Goldfinger Capital on YouTube. Thanks for joining me again for another one of these weekly videos. As you can see, I'm about to set a world record for most number of tabs open. So we got a lot to dig into today. Before I do that, a couple other things I want to maybe add to these videos. Maybe not every week, but every once in a while. Um, a book. So I just got this book. I just bought this book. And so my invitation, if you're interested in energy, climate change, and geopolitics, is to read this book yourself the next couple weeks. Daniel Jurgen, The New Map, and we'll discuss it. Um, 2-3 weeks from now. We can have some chat in the comments on a video in the future. So that's just an invitation. I think it's always important to read books, get new ideas. This one looks particularly interesting and particularly relevant to what the climate in the world is today. A lot of geopolitical tension. Climate change is a huge topic. EVs, green transition, um, and maybe the accident, the crash the world is cruising towards with renewables. Yeah, so that's another topic. Also, so these videos, they're long. It's just the nature of what it is. It's a weekly video. Once a week, I dig into so many different areas of the market, so many different topics. There's not just one set topic each week. And I like to do this because I like to organize my thoughts. It's a practice for me. It helps me to focus my ideas and articulate my analysis. And that's just how it is. So it's 30 minutes, 40 minutes. Sometimes it's even an hour. It might be this week. Some people said, "Oh, you talk really slow." Well, that's why there's timestamps. You can skip ahead. You can go 1.25 times speed. You can go 1.5 times speed. You've got a lot of different options. So it's better that I take the time and put out the best quality that I possibly can, and then you can digest it in a way that works for you. That's how this works, okay? Um, and I do talk a little bit slower often because I'm thinking and I'm trying to articulate things in the most effective way possible instead of just speeding through for the sake of speed, okay? So here, Goldfinger Capital, we're focusing on quality over anything else. So let's get right to it. Talking points. March 18th, 2024. Inflation rebound. So we have Bank of England Thursday. We have Fed Wednesday. BOJ is also meeting this week. So we got a lot of central banks, a lot of central bank talk coming. There has been the PPI last week definitely was hotter than the market expected. We've seen a little bit of an inflation uptick in the data in the last couple of weeks. Um, this is from the Eurozone. So this is Eurozone inflation data. And you can see there's not much of a bounce in the Eurozone. Okay. So the US economy is really a standout. And I'll show you, take a look at this graphic here. Full year 2024 GDP forecast. So, Japan 0.75, Euro area 0.5, UK under 0.5, US is above 2%. So the US is just the standout economy globally. It's just setting itself apart. Okay. And there's a lot of things we can discuss as to why that's happening, but American, exceptionalism in full display here early 2024. So the US is different from the rest of the world. Euro area shows no sign of a significant uptick in inflation. I think the ECB is most likely going to be starting an easing cycle very soon. The Fed is in much more question now. Remember, January 5 to 6 rate cuts were being priced in. I was pretty confident January, February that we would get 4 rate cuts in 2024. Now that seems basically impossible. June is even now a coin flip. So the Fed's going to announce Wednesday. There's not going to be a rate cut. There's not going to be a major policy change on Wednesday, but the dot plots are going to come out. The dot plots are where we get a consensus, the Fed consensus for where Fed funds are at certain dates in the future, right? So the consensus is that we're still looking at least 2 rate cuts this year, possibly 3, but the third one is now in some question because June was previously basically a foregone conclusion, and now it's a coin flip. Um, I don't really think that the Fed announcement is going to be a big market mover. Of course, I could always be wrong about that, but I don't. I see too many things in flux here and too much uncertainty for Powell to say anything to commit to anything that he hasn't already. And I think the dot plots aren't going to move much either. Okay, I just really don't. So I don't. I think it's most likely going to be a yawner for markets. But it's interesting to note that now the U.S. economy is showing this strength that most didn't uh, expect it to have, and inflation is clearly stickier than we thought it was going to be a few months ago. So it's a tricky situation here. But I really am not, from my vantage point, I don't think we're going to have an inflation rebound. We might see a situation where inflation is sticky around 2.8, 3% in that area. But I don't think we're going to see CPI spike back to 4 or 5%. Okay. I don't see that happening. But we have to make note of the strength of the stock market. I mean, look at the S&P. Um, I used to talk a lot about the S&P in these weekly videos when it was more interesting as an intraday trading vehicle. Now we are just in this grinding uptrend, and I don't see anything that's going to stop this market yet. Okay, it's just not evident to me. We can say it's overbought. Toppy, it's been overbought for months, for many months. Um, and the fact that we've seen this sector rotation, this bullish sector rotation, and now the industrials, the cyclical sectors are getting into this, are getting into the rally. Look at energy. Look at the end of last week, Thursday, Friday, big upside moves, pulling back a bit today. But let's zoom out on the XLE. We're basically testing 52-week highs in the energy sector. Okay. So the fact that cyclicals like base metal mining stocks, Freeport McMoran, are getting into the action, this is consistent with a rebound in the manufacturing economy. We're seeing a turn in the industrial cycle. Okay. And so I want to, and copper. Copper broke out above $4 at the end of last week, right? So all of this is consistent with a turn higher in the manufacturing economy in the industrial cycle. So the industrial sector, especially in the US, has been a major laggard in the economy for the last couple of years. And now there's signs that it may be bottoming out and turning up. So I want to take a look at this report from Goldman Sachs that helps to talk about last week's rally in copper. Let's turn this on. Okay. So copper's time is now is the name of the report. It came out on Friday. Copper obviously rallied pretty aggressively last week. You can see Wednesday it had the breakout above $4. Then it continued higher on Friday. And I'm sure that the Goldman report and what's contained inside of it has something to do with last week's copper action. So basically it's saying a turn in the industrial cycle is at hand here. After a prolonged downturn, we're getting more evidence pointing to a bottoming out in the industrial cycle. So global growth is resilient, and we're beginning to see monetary easing take place around the globe, and that's helping to underpin this turn in the industrial cycle. Okay. Um, and copper inventories are pretty low, and they make a point to say visible, the visible inventory level. So there is some stealth inventory out there that we can't see so easily, uh, but inventory levels are very low. So when there is a turn in the global manufacturing cycle, we can expect base metals to be significantly higher 1 year later. It doesn't always happen straight away. The first 3 months, you can see the darker blue. You know, in aluminum, it's still down 3 months later, but nickel, zinc, and copper show big gains 6 months and then 12 months out from the trough, the bottom in global manufacturing PMI. Okay. And it's interesting that when the Fed is beginning to ease in non-recessionary environment, it leads to strong upside in metals. You can see here's the starting point. In a recession, metals do not do well. Base metals, copper, zinc, aluminum, and nickel. But in non-recessionary, metals do quite well 12 to 18 months out. So this is the situation that we're facing. We've had the trough in global manufacturing PMI, and we're moving up off the bottom. And they go into China's green policy put that essentially they're going to strongly incentivize their population to purchase EVs. So that requires more and more copper and aluminum. So they're positive on copper and aluminum. In the report, I mean, it's excellent. Obviously, if China does this cash for clunkers program, it will be extremely bullish for copper. That's not clear that's actually happening this year. Okay, a lot of good charts, a lot of good data in here, and really sort of getting to the crux of it. Here you go. Here's the global copper balance. So we are swinging from surplus to deficit. Okay, so here's Q1. This is what's ending right now. So we have been in surplus, and we're swinging to significant deficit Q2, Q3, and into Q4. And then the deficit is expected to continue into 2025. Okay, so significant deficit, 400,000 to 500,000 metric tons of copper. So we're talking about billions of dollars worth of copper in a global deficit. Okay, and they talk about gold. We're going to talk about gold later in this video, but very good report from Goldman, and you can see the inventory levels in Europe are at acute low levels. Copper, aluminum. It doesn't look like Europe has any zinc inventories, unless I'm reading this chart wrong, but I don't see any red over here. So, and that's one of the reasons my bullish thesis for base metals explorers is multifaceted, but this is definitely one of the key factors. Is I feel like zinc, copper, even nickel, although that's a trickier metal, have bottomed. Okay, we've seen the worst of it. Maybe you could say the same even for tin. Okay, and as the global industrial cycle turns up, supported by central bank easing, we go from serious headwinds in 2022 and 2023 to tailwinds. Okay, so that's just summing it up really as cogently and briefly as I possibly can. Okay, but the copper breakout above 395 $4 area, it's very significant. And let's zoom it out a little bit. Let's look a little bit longer time frame. Copper has not spent a lot of time above $4 in the last year. It's spent a lot of time around 370, 380, 390, but now we are breaking free from that price range. So that means that the market is rebalancing, and in order to rebalance, it's having to move to a higher price level in order to encourage more supply into the market. Okay, so very significant breakout move in copper. And again, it's consistent with this upturn in the industrial side of the economy. And this is a global thing, but particularly in the US. Okay, so cyclical sectors are outperforming. And this is just another reason why it's hard to just be outright bearish on, let's say, the S&P 500, um, because we've had a very bullish sector rotation so far this year. Okay, enough. There's not enough evidence to be outright bearish on stocks here. Okay, there's a difference between a tactical, intraday trade or a little swing trade overnight or something, but to be outright bearish on stocks, we think it's too early. Okay. Um, so let's keep going here. We talked about copper, Goldman report. So medical psychedelics. See, this is how these videos go. We go all over the place, but trying to get a little more micro here, starting with the macro. So Cybin and MindMed. So those who have watched these videos before know, obviously, I'm an advocate of this sector. I'm an advocate of medical psychedelics and what they can do to disrupt the mental health treatment paradigm. They can do a lot of good for the world, a lot of good for humanity, and investors might be able to profit a little bit um, in some of these stocks, although that's much trickier. It's very tricky. So here's my Substack. So shameless plug here, Goldfinger Capital. I mean, if you're not a free subscriber, maybe you should be. I mean, at the very least. And if you're not a paid subscriber, it's $80 a year. It's really not much money. You get a lot of paid content, valuable content, I hope. And it's wide ranging. It's from trading psychology and mindset to biotech to medical psychedelics to junior mining to precious metals and even to the broader financial markets, right? So you get the full spectrum of my content and my analysis on here. About half the content is free, so you can just be a free subscriber and read that stuff, or you can get the full Monty. This was a free post. The year of medical psychedelics, March 7th. The year of medical psychedelics is upon us, and this was after MindMed published the 12-week data for their MM120 program in anxiety. Okay, and the results were fantastic. We discussed this last week, I believe, and now Cybin put out great results last week for their CYB003 phase 2 trial in depression. So the two biggest mental health ailments facing the world today, Cybin and MindMed, are addressing them, and both have produced very positive phase 2 data. So first of all, 75% in remission after 4 months. Okay, so 2 doses, 16 milligrams in each dose. This is psilocybin. 75% of patients remission after 4 months. That is phenomenal. 3 out of 4 3 out of 4. That's phenomenal. So there's no current FDA-approved treatment that has managed to produce the kinds of results that MindMed and Cybin have generated in each of their phase 2 trials, right? With the current treatment protocol, which is benzos and SSRIs, antipsychotics, the list goes on. The results are pretty poor. I mean, like a 50% failure rate, I think, is minimum. I think the failure rate is actually probably more than 50%, with a significant amount of side effects, even for those patients who are, responsive, who show some benefit from the current treatment paradigm. There's a lot of side effects. So Cybin's phase 2 results for CYB003 and MDD were fantastic. And both Cybin and MindMed have received breakthrough therapy designation from the FDA. Okay, so this is really important because it gives them a big leg up, and it gives them a fast track to potential full FDA approval. Okay, and so by giving it breakthrough therapy designation, they're also acknowledging the significant unmet need for more effective treatment in both anxiety and depression, right? And it provides validation for both companies, both MindMed and Cybin, that their phase 2 data shows significant clinical improvements over existing therapies. So this really is a breakthrough for the medical psychedelic sector. This is a significant breakthrough here in the month of March. Just in a couple of weeks, both of the leading companies in the sector have delivered fantastic phase 2 trial results, and they've been acknowledged by the FDA, right? And then both companies will move on to phase 3, MindMed and MM120, Cybin and CYB003. And that's just the beginning of the good news. We still have potential FDA approval of MDMA coming in the next few months. So that's going to be a big catalyst, going to give major mainstream recognition to the medical psychedelics sector and the potential benefits of these new treatments. And yeah, and there's still a lot more phase 2 and even phase 3 trials ongoing, So the sector is really coming into its own after a really difficult few years. And MindMed, the MindMed chart is phenomenal. It's one of the best biotech stock charts of 2024, of the last year, quite frankly. Cybin is a bit trickier because they haven't managed their share structure as well. And I just want to make one more comment before we move on from this. So in last week's video, I was very bullish on Cybin, and I really was looking forward to the results that we got last week. I had no idea they were going to be as good as they were. They were phenomenal. On the back of the great phase 2 results, the 4-month results, they also announced $150 million financing priced at 43 cents. So it's great that Cybin can raise this kind of money. $150 million is gonna take them through 2026. It's gonna take them all the way through the phase 3 in CYB003. However, it kills a lot of the potential upside because already they had over 400 million shares outstanding. Then add on another 300 plus million, and you're almost at 800 million shares in total outstanding once this financing closes. Okay. So from a phase 2 trial standpoint, the results are spectacular. From a quality of life for patients, for potential, benefits to the world, the results are phenomenal. Great job, Cybin. From a shareholder and share structure management standpoint, not so great. I wonder if they could have gotten better terms if they waited. I just wonder. It seemed like they gave away the farm there at 43 cents a share, and they're sort of pinned down now to that valuation for some time. It's unlikely that you're going to see Cybin move much out of this 40-cent range until, I don't know, we get more results, maybe even from phase 3 in 2025. So it's really that announcement really killed a lot of the momentum, and it killed a lot of my excitement for the stock. I sold my Cybin shares. Okay. I think the company generally is doing a great job. Their results from CYB003, 004 have been fantastic so far, but from an investment standpoint, that's a different, you have to look at it through a different lens as an investor, as a shareholder. And I just think that they that they limited a lot of the upside there. But the era of medical psychedelics is upon us, and you're going to hear a lot more about this sector from me throughout 2024. Okay, so let's move on from that topic. What's next? Okay, junior miner charts. Okay, so back to metals. And actually, let's talk about gold first. So I did a piece with the Daily Gold, Jordan Roy Byrne, last week. That's up on his YouTube channel at the Daily Gold. It was a good conversation. Got a lot of content out of me, a lot of my thoughts and analysis on both gold and silver came out in that video. What I will add now is that this pullback in the last week from gold's first test above 2200 on Friday, March 8th, so just a little over a week ago, the consolidation since then has been absolutely textbook. I mean, it's just a classic um, pullback on the daily time frame. So let's pull this to a daily chart on gold, and just working off the overbought condition from 2 Fridays ago, high and tight consolidation. I mean, I couldn't have scripted a better uh, set of price action, a better sequence of price action than what gold has been doing over the last week. Okay, and it's staying above this little orange line. Okay, it's a 2-hour chart that I just use to look at gold on like an intraday basis. And you can see I have a couple lines, orange and purple. They're pretty far apart, but the orange line is the higher one, 2131. And this is sort of my first big level of support that's underneath gold here. And it hasn't even really come close to it. So it's consolidating at a pretty high base, and it's worked off all the overbought um, on multiple time frames. Okay, and the weekly chart continues to be a very significant breakout. I mean, this is a very significant breakout above 2100, and it's consolidating above that breakout level. So this is very, very bullish price action in gold. So let's talk a little bit about gold's drivers here. So very strong central bank buying. Obviously, a lot of the buying in gold is coming from the east. It's coming from China. You can notice in this chart that actually central banks were net sellers last April, May. They actually turned slightly net sellers on that um, gold rally on the regional banking crisis last April, May. It's kind of interesting that they flipped to being net sellers there, and then strongly turned back to being net buyers again during the summer, and they've stayed net buyers ever since. And this is as of January, so we don't have the February data in full yet. But central bank buying is one of the key underpinnings in the gold price. I also have to think that one of the biggest drivers, if not the biggest driver, is the U.S. deficit and debt situation. I talked about this with Jordan Royburn. You have a $7.3 trillion budget expected from the U.S. this year. Last year, the U.S. collected 4.5 trillion in taxes. So you can do the math there. Even if taxes go up this year above 5 trillion, it's still a very, very, very large deficit. The other candidate, Donald Trump, wants to cut taxes if he's elected. So that will make the fiscal situation even more acute. Nobody has a solution here. Like neither party does. They're both spendthrifts. They both want to put out forecasts for balancing the budget 10, 12 years from now, then it never happens. Okay, this is the way it's been my entire life. They propose, yeah, we'll get close to balancing in 10 years, and then new parties are elected, new presidents are elected, and then they put it off again for another 10 years. And so it's kicking the can for eternity. The U.S. debt rises by 1 trillion every 100 days. The interest payments on national debt are now over $1 trillion per year. And if interest rates stay high, if the Fed funds rate stays 5.5%, that's only going to get worse. Okay, higher treasury yields are, the more interest the U.S. has to pay on its national debt, right? So I feel like the gold market is getting to where the puck is going, right? And the puck is going to a situation where inflation is not fully conquered. It's not fully down to target, but the Fed is beginning to ease, and other global central banks are easing even um, more aggressively than the Fed is, right? So gold is a global market. We have to think globally. We can't just think about our little world here in the US and North America. Gold is a global market. Um, I felt like Powell's testimony in front of Congress was dovish. And then when you contrast that with last week's inflation data, it's like, okay, so he's dovish, but inflation is not continuing the trend down. It's showing stubbornness. Um, yeah. So you have an election year, a big presidential election year. You have a lame duck Fed chair. Um, you have a deficit that continues to widen in the U.S. And employment is probably, although we don't have confirmation of this, the data that I look at shows that the employment situation in the US is not nearly as robust as the headlines make it out to be. And that may show signs of further cracking over the coming months. We get, revisions downward every month. To put it all together, it's a very bullish backdrop for gold. Okay. Um, Gold has actually worked off the overbought in the short term. Okay, the consolidation, as I said, absolutely textbook range bound consolidation above 2150 is the healthiest thing. But the long term, to look at the monthly 20-year chart, the long term cup and handle targets to 2700 plus. Okay, um, and the hardest part about being bullish on gold right now is I think just sitting tight. I mean, being bullish on gold here has been proven to be right. Longs are right, and now they just need to sit tight, And in fact, let me do a little marking up of this chart, right? So we've had this strong impulse higher at the end of 2022. We had a pullback. Then we had another strong impulse higher. Then we had a much longer pullback that led to a major short-term and medium-term low in first week of October 2023. Okay, that was a very memorable turning point in the gold market because recall back to that time, we thought Fed was going to hike even further, more tightening was coming, and then gold just stopped going down and started going up. Right, everything seemed to shift then. And gold has been in a very clear, strong uptrend since the first week of October, although it did have a significant consolidation at the end of 2023 and first um, 6 weeks or so of 2024, and it's broken out from that consolidation. So just looking at gold's price action on multiple time frames, it has been extremely healthy. No signs of any parabolic moves yet. It has been a relentless accumulation and a steady uptrend. Okay, so very, very bullish price patterns in gold. Silver, a lot of people love to talk about silver, love to ask about silver. I made some tweets about silver, but I'm just going to keep it simple. $26 is the breakout level on the weekly, monthly time frame. Silver got above 26 a few times very briefly in 2023, but could never hold it. So we need a breakout above 26, and it needs to stick on a monthly closing basis. Once that happens, $30 will be up next. Okay, it will be absolutely, silver will be headed to $30 within months, if not weeks, on a confirmed breakout above 26. 30 is going to be a big, big, big level. I wouldn't expect 30 to be surpassed this year, but it could definitely be on the agenda for 2025. And just look at bigger picture, how big that breakout above 30 will eventually be. Okay, very significant level. And there's a lot of blue sky above that $30 level. So 26 is in focus now and over the next few weeks. Once 26 is cleared, I think 30 is very much on the radar. But again, this is the monthly chart. So it won't go from 26 to 30 in a straight line in a week. It will probably take a few months, let's say 2 to 3 months. And then you could expect some pulling back on the first test of 30. But once that $30 level is broken, and by the way, it could break out above 30 this year. I mean, it's March, it could happen in Q4, of this year. It's definitely possible. But if I look at this monthly chart, and if this was a stock, I would say, wow, we are early and we're right on the cusp of a breakout. Clearly, this is a long-term bottom. This is a multi-year bottom that silver put in place between 2015 and 2020. So, that's a 5-6 year bottoming process that it put in place. We're just on what is like the second wave higher, okay, from that major capitulation washout that happened in March 2020. Okay, so bigger picture, silver is very, very, very bullish. Okay, um, Freeport McMoran. So this is one I've been pounding the table on in January and February, and it finally really caught some strong buying last week with that copper price breakout. Um, Freeport is the simplest way, the lowest risk way to play copper. It's even a way to play gold. It's a copper and gold producer. It's in the S&P 500. It's a major multi-billion-dollar global company. And this looks fantastic. And this is confirming the fact that cyclicals are beginning to perform, they're beginning to outperform. I will say that just in the near term, so this daily chart, we're starting to get a little overbought here. It's had a pretty aggressive move the last 2 weeks. So I wouldn't mind to see some consolidation up here around 43, 44, $45. Um, but Freeport, this is a major breakout. I mean, let's take a look at the weekly chart here on Freeport. Yeah, look. 45, the 45-46 area is a major long-term level. Okay. And so we're at the upper end of what has been basically its 12-month range. So I wouldn't be surprised to see some consolidation up here, and then a push up to 50 perhaps in April. Newmont, so gold miners consolidating. I mean, it's consolidating. The most hated stock on planet Earth is Newmont Corporation, formerly Newmont Mining. Now it's Newmont. We're a gold producer, but we want to act like we're something else. But $34 level is a big level in Newmont. It continues to gravitate to this level, but this continues to the, the February low was a major capitulation washout in Newmont. So I'm not really as interested in trading the stock or being long the stock, rather just to use it as a sentiment tell. Uh, Gold mining sector had a major washout at the end of February, and we're just coming up off of that washout. Okay, so we're still early in this move. GDXJ, high and tight consolidation, just like gold is in. And actually notice how the GDXJ chart looks so much better than the Newmont chart, right? So mid tiers um, are probably increasingly the place to be here in this next leg of the gold bull market. Um, and now let's take a look at some other junior charts. So I'm moving away from gold and moving to lithium. So uh, Patriot Battery Metals. This is Lithium Explorer, fantastic new discovery in Eastern Canada. Um, but let's just take a look at it from a sector and chart standpoint. I'm not really going to dig into the company. I'm not going to dig into the company at all. The lithium sector had a major washout at the end of 2023 and the beginning of 2024 as China and the Chinese markets were under heavy pressure in January. The lithium sector completely imploded, right? So Patriot went from $10 to $6 pretty much in a straight line there in January. Very messy bottoming process with lots of gaps on the chart. This is also traded in Australia, so that explains some of the gaps. Um, but it 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 showed very strong buying strength at the end of February, and it confirmed on this thrust higher that it had put in the bottom, that this was the bottom in early February. Okay. Um, so, one of the key characteristics of a bottom is volume and volatility expansion and a very strong impulsive thrust higher. So that's what we see here at the end of February. Okay, this to me was strong evidence that Patriot has bottomed. Okay, and so now it's just a matter of, can we get in on a pullback? Can we get a good entry? And it gave it the first week of March. This dip back to, let's call it 775, back testing the 50-day moving average. Yes, it's a falling 50-day, but to me, the fact that it pulled back 775 was a key level. It held that level as support. This was the entry, and the uptrend has resumed since. So um, this is just a classic trade setup where you have uh, a breakout and then a back test of the breakout level. All right. So this is, in my mind, this is a confirmed bottom in Patriot, and um, to invalidate that, we would need to see it break back under 750. Okay, and then it would be big trouble. But right now, this looks to me like this has confirmed its bottom, and it gave a very nice re-entry point on the back test of the breakout level and a very nice trade opportunity, which I did trade it, took a long and took profits on that long last week. So just wanted to highlight that trade setup. Okay, so let's continue. Copper. Yeah, so basically just want to go through these charts and we'll wrap up this video. Okay, so where's my Substack? Okay. Well, I got rid of it. But anyway, let's just go through the chart. So again, subscribe to my Substack. I had an article up on some junior miner charts. That's a paid article. You need to be a subscriber to read that. It included a secret stock, which I won't reveal. You got to read my Substack to see it. But I want to go through um, some of the juniors in my portfolio, some of the ones that I really like. Copper porphyry plates, American Eagle gold. So AE.V. Look, this company has been in a relative quiet period for the last couple of months. Obviously, they were on my panel at the Metals Investor Forum in Vancouver back here in January. I highlighted them, but they haven't been drilling because it's winter, and their NAC project is in BC, is in an area of BC that gets cold and snowy. So it's been a relative quiet period, and the stock has continued to trend up. Okay. So I love to see this, that during the seasonal lull, we're still seeing pretty strong, healthy price action in this stock. And now I know, as it's March 18th, well, I know that American Eagle told me um, in January in Vancouver that in April they plan to mobilize back to camp and do some more IP work. So an IP survey over um, a larger portion of the property, some deeper IP work, um, and get the camp ready for the resumption of drilling, which will probably be in May, right? So we're now getting close back to the drilling season, right? And so that should be a catalyst to bring more investor interest to this company. So I love the way that it's been consolidating, high and tight consolidation during its seasonal lull period. And now we're going to have an exciting spring and summer ahead of more exploration and drilling. And this is a company that has a pretty good treasury. I think 5 million Canadian at last check. It's not to say they might not um, top up their treasury if the right opportunity arises, but they don't have to, right? And so that's a position of strength. I like that. Last week, and actually the last couple of weeks, we've seen a lot of copper juniors get greater interest among investors. So ATX, this is a copper focused junior in Chile, and they have a pretty nice porphyry down there, and with some pretty good grades, some pretty high copper grades. Not an expert on the company by any stretch, but I can see an uptrend when it hits me in the face, like this chart, and notice the volume came in really strong last Wednesday. So that was the day that copper broke above $4. So we're starting to see money flow back down the food chain into the copper juniors. The $4 price level breakout, the Goldman Sachs bullish report on Friday, the copper juniors are starting to get some love. All right, there's me speaking slow again. Also, I want to point out that stockcharts.com does not have all the Canadian trading volume. So you just have to know that. Stock chart doesn't aggregate all the alt exchanges in Canada. So it always understates the trading volume. Okay, so you need to go to co.ca or Stockwatch and pay. You got to pay, they make you pay to get all that data. I think the full version of CEO Pro is like almost $1,000 a month. Stockwatch ain't much cheaper, but if you're trading every day in Canada, it's you got to have it. You just got to have it. Hercules. So let's zoom this one out a little bit. Let's look at the 8 month. This consolidation since January just continues. But just like I said about American Eagle, well, we know that drilling at Hercules is going to start by I think by May 1st, right? I mean, I'm not the CEO, so I don't know that as a fact, but that's the guidance that I think we've been given, and that's what I'm expecting, that most likely the camp will be, you know, the crew, everybody will be mobilized to camp in April, and drilling will commence the first week of May, right? So we're getting closer and closer to that. And also, for sure, before that happens, we're going to get an update with the company outlining its 2024 plans for drilling. We know there's going to be 3 core rigs, 1 RC rig to do pre-collars. So 4 rigs total, 20,000 meters of drilling. They got 25 million in their treasury. So this is, in my mind, this is a great setup. And obviously I'm long and talk in my book here. I like the chart. I like the fundamentals. I like the fact that drilling is 5-6 weeks away, and we're going to be drilling all summer. Libero. So here's another one. So this company's not drilling. I don't think they have any plans to drill, at least not that I'm aware of. They have a copper porphyry project in Colombia, but this whole rise in the share price is due to Frank Zustra coming in and taking a 19% stake in the company, and the market speculating on what could be coming. But nothing has really changed with the company or drill results or the metal that they have in the ground. This is just sentiment improving on this specific company and on copper juniors more broadly. So that just can show you what a sentiment change can do in the junior mining sector. All right, Regulus REG. This is another one, copper in Peru. They've got a big copper resource in Peru. Look how dormant this share price was in January and February. It barely moved. And then last week, boom, volume price action, right? So just more and more evidence that the money is starting to flow back into copper juniors. VR Resources, I've talked about this one. Look back at my videos. It hit 20 cents on Friday. Okay, so this is literally a stock that was in the pennies in January. It was at 7 cents at one point in January, hit 20 cents on Friday. They are drilling imminently at their new Boston project, north of Tonopah. Copper, right? And I hope to actually be visiting this new Boston project uh, later in April. We'll see. It's not confirmed, but I hope to make a visit there and visit a few other companies along the way. And then here's another one, Ridgeline Minerals. So final topic, Ridgeline is not getting much love. It has not been receiving love from investors for the last year, that's for sure. Look at the chart. But this is another one I'm long of. And I'll tell you just simply why I own this stock. I own the stock because of the CEO, and I own the stock because of the potential of their exploration projects and just the quality of the work that they do. So they put out a news release last week. I'm going to let you read it. I'm going to let you dig into it if you care about it. But I just want to highlight the quality of this piece of news. And I really like the graphics. So basically, almost anybody can understand by reading through this that, okay, here is a project held by Freeport-McMoRan, one of the largest copper miners in the world, the Butte Valley Porphyry. So this is a porphyry project that Freeport is drilling. And here is, the project held by Ridgeline. And the focus of this news they put out last week is the porphyry anomaly right here near the Chinchilla Oxides. And just look at how good these graphics are. Here's Freeport's Butte Valley. Here's the porphyry. skarn target, chinchilla sulfide target, and you can see we're working ourselves closer to surface. You can see this is dipping down at depth here to this Butte Valley porphyry, but here's another potential porphyry. This is not confirmed. It hasn't been drilled. They haven't drilled deep down there, but this model makes a tremendous amount of sense. Look at all this silver and zinc and lead and copper and even gold up closer to surface. All of that metal was fed by potentially multiple deeper porphyry sources. And you can see, so they did this 3D magnetic inversion, and look at that anomaly. I mean, it's just hitting us right in the face, right? And everything about this modeling just fits perfectly, and it looks very much like this Butte Valley porphyry that is held by Freeport-McMoRan. Okay, so Ridgeline, really quality company, really unloved, under the radar. Yeah, they're probably gonna have to raise money this year. I mean, yes, they will raise money this year, right? So that's hanging over them. But I even like it even more because of their other project, which is called Big Blue, and that's also a copper porphyry project. So if you're interested, dig into that. Go to the company website, ridgelieminerals.com, RDG on the TSX venture, right? So this is me talking my junior explorer book, American Eagle, Hercules Silver, Ridgeline Minerals, VR Resources. And that's it for today. Let's see where we are in the S&P. Going nowhere. We're just going sideways, right? And that's another thing. With the Fed on Wednesday, probably not going to have any big market moves between now and then. But great research report from Goldman on metals, on copper, on gold, and evidence continues to point to an industrial upturn in the US and globally. And also, data continues to point to US exceptionalism. Sorry to all the Europeans and non-Americans watching this. US economy, we're good at making things, at making money, and at making our stock market go up. USA, USA, USA. I'm just kidding. I don't really care about that stuff and patriotism. I don't really care. Thanks for watching. Have a powerful trading week, and I'll see you next week.